July continues where June left off, rallying on surging market optimism. The S&P heads into the fourth, hitting new all-time highs up almost 2% for the week. A quick recap. June ended Monday higher despite lingering tariff uncertainty and incoming jobs data. First up Tuesday, job openings in May surged past expectations. However, it led to a slight pullback as strong jobs data could give the Fed more time to wait out potential inflation impact from tariffs. Then Wednesday got just as big of a surprise in the other direction with ADP's private employment data falling by 33,000 jobs. In addition, official tariffs on Vietnam were announced. A blanket 20% tariff on almost everything from Vietnam and 40% on anything just passing through it. Markets rallied on optimism for rate cuts and hopes for more tariff certainty. Finally, Thursday, we got the jobs report a day early with July 4th on Friday. Yet another job surprise with non-farm payrolls increasing by 147,000 in June. That was a slight improvement from the 144,000 in May and well above expectations to decline to 110,000. Meanwhile, unemployment fell to 4.1% versus expectations to increase to 4.3%. Despite stronger data likely delaying rate cuts, markets ran anyways on thinner trading Friday, optimistic that the economy was resiliently absorbing the tariffs uncertainty. This finished a short but strong market week at new all-time highs again as June's rally continues into July. So what now? Markets remain extremely optimistic and, as we've mentioned before, continue to view everything as a glass half full. The jobs data was strong, but we came away mixed with more questions than actual answers. While not a perfect indicator, the overall direction from the private jobs data should reflect in the jobs report as well. We have some more thoughts here and we'll be following up with a deeper dive over the weekend. In addition, tariffs also remain a question mark. Their reciprocal tariffs deadline is next Wednesday, and the White House has indicated that they won't extend it. However, as usual, markets are assuming they'll extend it anyways. So markets cheered the Vietnam deal most likely because it's finalized and not to threaten higher reciprocal tariffs. However, it's still a 20% blanket tariff on all imports from Vietnam, which likely still gets passed on to the consumer. Vietnam is a small trading partner, but if more deals are also going to come in above this 10% baseline tariff, we don't see how more inflation isn't on the horizon. Anyways, have a safe 4th of July and look for our deeper dive into the jobs market over the weekend.